All right, mortgage rates today. If you bought your home in the last couple of years at a high rate, like 7% or above, I'd be sitting on one of the biggest potential wins right now. Because mortgage rates have actually moved lower than they were recently. Right now in the U.S., the average 30-year fixed mortgage rate is just above 6%, near the lowest levels we've seen in the last few weeks. Let's break that down in simple math. If you bought a $400,000 house at 8%, your monthly payment could be around $2,300. At 6% today, that payment drops to about $1,900. That's real money back in your pocket every month. So the big question everyone keeps asking, should you refinance? Here's the simple rule people use. If the new rate is at least 1 percentage point lower than your current rate, refinancing can make sense. Even a 0.5% drop on a big mortgage still adds up to huge savings over time. But here's the twist. The market is still watching inflation, the economy, and what central banks do next. In the U.S., cooler inflation data has pushed bond yields lower, and that helped mortgage rates improve recently. And for anyone looking to buy a house now, mortgage rates might not go back to the ultra-low levels we saw before COVID. But they're better than recent highs, and there are even deals below 5% in some places if you have a decent deposit. So bottom line, rates have eased. If your current mortgage is much higher than today's talk to a broker now, if your buying factor in things like school zones, job moves, and closing costs before jumping in,